The markets are focused on the vaccine news and stimulus package in the US. Global oil prices fell on Monday, but were still holding near the 9-month highs. The ruble entered a phase of correction after a 4-day rally. Market participants have already priced in all the factors, including the vaccine development and the OPEC Plus deal. This week, oil has no strong drivers to move higher. Only the news on additional stimulus measures in the US may improve market sentiment. US House of Representatives Speaker Nancy Pelosi said that the lawmakers are close to reaching a compromise on a new budget plan. Today, oil is going through a correctional decline after a recent rally. On Friday, oil benchmarks reached their highest levels since March. Oil bulls managed to push Brent to almost $50 per barrel. The outcome of the OPEC Plus meeting also supported the oil rally. At the same time, the increase of oil production by 500,000 barrels per day is hardly a positive factor for the bulls. Investors hope that the decision on fiscal stimulus for the US economy may prop up crude prices. However, for a sustainable uptrend, oil will need additional driving factors, such as the rollout of a mass vaccination program. In the early trade, crude prices moved slightly lower and then extended the downtrend. Both benchmarks lost more than 1% of their value. Brent futures with the nearest expiration dropped below $49 per barrel. WTI failed to hold at $46 per barrel. As a result, WTI futures for January were $1 down from Friday's close. Brent is seen to stay in the range between $47 and $50 per barrel in the coming days. The key resistance is found at the levels of $50.50. Further direction in the energy market will largely depend on how quickly the coronavirus vaccine will be delivered. Lockdowns will stay in place until the majority of the population is vaccinated, and this may take months. Another surge in coronavirus cases forced the authorities of Southern California to impose new restrictions. Meanwhile, investors continue to monitor the political situation in Washington. The possible escalation of tension between the US and China may deteriorate market sentiment. It has been reported recently that Trump's administration is going to impose new sanctions on a number of Chinese officials. The slowdown in the oil's rally and a drop in emerging market currencies weigh on the ruble, which opened the day in the negative territory. Last week, the Russian currency showed steady growth against the US dollar and even managed to reach the level of 73. Today, the ruble is unlikely to settle below the mark of 74, given a moderately negative background and a fall in crude prices. It looks like the ruble is about to enter a technical correction, so the dollar-ruble pair may rise to the area between 75 and 75.50. At the same time, the risk on sentiment may help the ruble resume its uptrend. Financial markets may gain support from fresh liquidity provided by global central banks. Thus, the approval of a rescue package in the US and a traditional Christmas rally may improve risk appetite and increase demand for the ruble. Traders may refrain from making decisions ahead of the Fed's meeting. This means that trading activity will be lower this week. Therefore, investor response to the macroeconomic data may be less enthusiastic. Global markets may even enter the consolidation phase. That's all for now. Thank you for watching and stay tuned.